Oh, we thank God. We thank God.
All right.
We
Please, good morning. Good morning for those that are here. Uh, we love if you can stream from the YouTube side. You can join this. Can also join on the YouTube side. So for those that are here, Richard, Mr. James. Okay, let's start. I think we have 9 persons now. We have 9 persons. Yeah, good morning. Supreme Brand. Please confirm. I think you can hear me.
Yes, can hear you. Go ahead, please.
I'm talking from the YouTube side. On YouTube. YouTube, can you hear me? Please, can you hear me? Kindly drop. Okay, I'm audible enough. Okay, Mr. Ye, please. Is it from the YouTube? I want to know if the YouTube people are hearing me. I have 10 persons. Okay, thank you. So, well, welcome back from a new week. We thank God for what He did last week. Despite the ups and downs in the markets, due to the Donald Trump tariff saga and global economic issue, the market has not been stable for some weeks now. The market has been reacting to majorly fundamental. But despite the up and down in the market, we still believe that we still have some people that cash out last week. We have a lot of people that withdraw, and also we have people that also lose money. We also have people that lose money. So that is it. So people, some win, some lost. Me, I lose money. I make money. But so that's how trading. So some people must win, some people must lose. So this is a new week. I want to, from the for everyone that have joined, I think I have 16 persons from the YouTube, and I have 8 persons from here from my side here now. So please, people on the let's join through the YouTube. I need the attendance to increase. So as we continue, I have Mr. Jerry on the call. Thank you for joining. I have Sito, my partner here, and I have great great trader, Mr. Femi, and Maswell. I have Supreme Brand, Chineberik, Mr. Kingsley, right? I have a lot of great trader here, Opeyemi. I have a lot of great men, great trader here on this session this morning. So this is a new development that we are transiting to the YouTube side now. So for us to reach more people, for more people to benefit from all that we have been enjoying for this couple of months. So we want to reach thousands of people. You can help us to reach more people, thousands of people, by sending this link to friends and loved ones. Let them join, and so that they can be beneficiary of these great sessions. So without further ado, I will dive to the charts. I will this is 10:42. Maybe in 25 minutes, we'll look at currency, then we use other things to look at the synthetic side. All right. So this is DSY. This is which we are starting from the week. We look at DSY, we look at some major currency. So DSY has been so bearish, right? Now, when you look at the weekly perspective, you can look at from this range to this place. Now, this is a ranging market. This is a range, right? So we confirm a range. I am seeing this guy for more bearish in terms of weekly perspective. So we have been ranging. Then the next thing you see, I will title here as what we call a fake out. So let me label that as yellow. So we have that. So when you see a ranging market and price, what price did, breakouts, making a fake out, then we have it going to opposite side. So this breakout is a false breakout, which we also call a fake one, a fake breakout. Now, a lot of people, what we call breakout strategy traders, they buy from here thinking that price will surge to this place. So price has swept them out, and we had price moving to the opposite side. And now we see price tapping to this supply zone. So price mitigates that supply zone, fill up that weekly imbalance, tap into that supply zone. So where the US dollar is in a very, very bearish mode. Now, what will be our projection that we will see that I have this tiny price making a sort of back. So all liquidity will be taken care already. So we have weekly.
In the drive truck, the drive truck, they call it, they come back. Don't be big knowledge. Go ahead. The drive. No. Don't think they work for her now. Don't think they work for her. I won't show the people from the world. Yes, I will not say that. Think I don't do for that. Very, very ungrateful. And I see get bad mouth. What do you do? What do you do? Do the thing.
So we have
Because my own family,
so we have weekly.
the family. Let me speak and be careful.
Who's that guy?
Because that's to go and talk towards me.
Sorry.
Hello, Caesar. Please mute your mic.
You understand the thing, so.
So we have weekly low, which is tapping. So I'm expecting to see a kind of relief from DSY this week. I'm expecting to see a kind of relief from DSY this week. So what would like to be? So we are looking at this demand area, this supply area. So we can experience maybe a much deeper lower, but a kind of what relief to this zone for DSY this week. So DSY, we may we help us in this country. These are fake networks. So now this week, we may experience a pullback from DSY, and look for a sell. You know, last week I point out this zone that price we tap into this place and we may have a sell. So you can see that immediately price tap into that place, we have the sell. So this week also, we'll be looking at price tap into this zone, then we can continue going down. 4-hour confirm break BOS on 4 hours. So on 4 hours, BOS has been confirmed, and this is the supply zone that caused the BOS. So pullback will make us to look for a more downward opportunity on a DSY. So this week, we may between today to Wednesday, where price formed the high and the low of the week. So we may expect. So let's see the economic calendar for this for the week. Then we make us to so economic calendar for the week. So we have tomorrow on Tuesday, we have GDP country change. We have CPI on cards. Wednesday, we have BOC monetary reports. We have core retails on USD by 130. Then that's Wednesday. Then CPI by on 11. Then this 6:30 p.m. on Wednesday, we have this Fechama Boe speech. That's another powerful speech that will change the market. Then on Friday, so we have news. We have some news in this week, but not that too crazy. So let us go to currency now. I will talk of one of 3 currency pair, major, and look at 2 major that we can We can continue to the other side. So GBP USD is my first outlook this morning. I'm seeing a pullback coming out on GBP USD. A pullback is coming on GBP USD. Let's see. So GBP USD, this is the overall target for bullish. This is my target on bullish. Now, we have this, you can see price tapping to this imbalance. And we have this sharp. So that drop gave us what? Sweep all the liquidity that in this low, right? So then we have it tap into this tiny imbalance also. So we have it tap into tiny imbalance, but there's still the supply zone here, the demand zone here is still much open. So we still have a demand zone. We still have an open demand zone and attached by this tiny fair value gap. So I'm still seeing price in this format, then before maybe we can move back to that the draw on liquidity on this swing high. So this week, I would love to, if I see a bearish pattern here, I would love to sell GU. So we may sell GU from here and take it back to this low. So why do I confirm that we may sell GU from that zone? Number one, for my higher time frame, this is a very strong zone, a daily imbalance that price tapping, and we have that brought price down. So now, what do we see now? We see price return to this supply zone. So we are currently on that supply zone. Having do what? We have a break of structure for 4 hours. We have a disconfirmed break of structure for 4 hours here. So we'll be looking for, you can see, all we need now here, we need a price confirmation, a bearish confirmation. So we can get that one for 15 minutes. So this is what we want to see on 15 minutes. This is what we want to see on 15 minutes. So we want to see this low. If this low is taking care, 15 minutes. So we have this high, we have this low. So if price give us this shift in market structure on 15 minutes, then so we can say, we will say what? GU. So when we say GU, on the way up, GU already built us a kind of trend line liquidity that which give me an evidence that we have a very good sell on GU. So confirmation on GU, we are waiting for price have cut our POI, but we are waiting for a bearish confirmation of 15 minutes or 1 hour. So when it comes to 1 hour now, how do you know that a price may sell from a zone when it begin to create a weakness? You can see this 1 hour candle close bearish. The next 1 hour, if it close bearish, this is a sign of weakness. But for more confirmation, if you can take out that low with momentum, with bearish momentum, then we'll look for a sell opportunity. And if I'm looking for if I sell, I may love to hold my price, my trade down to this place. So that should give us approximately, let's say we are selling from this zone, that we'll begin to look at about close to 400 pips at cost of the week. So GU in a zone, in a POI for a sell opportunity, but we need a confirmation. So that is clear. Then we move to Euro USD. So daily on Euro USD, Euro USD is bullish. It's bullish. Euro is more bullish now, even than GU. So we have this draw liquidity on Euro USD. So we need price to sweep out this liquidity here, then. But now, what do we see? So it's better we look for a price on weekly basis. Maybe by this way, if price swept this liquidity and close back bearish, then that would be a deeper sell for Euro, right? So now So let's go to daily and look for structural rank based on daily. So on daily now, we continue bearish bullish on daily. So we have this top that is our target. Likewise, we have this demand open for on this guy. So we have demand open on this. So what do we do? Jump to 4 hours. So 4 hours, let me refine the demand like to this. So already we have 4-hour break of structure. We have draw liquidity. So it's two things. If price first sweep liquidity here, then we look forward a sell opportunity that will take us to this zone. So liquidity sweep above 1.4149. We look for a shift in market structure in 1 hour or 30-minute time frame to sell down. So that means that will confirm weakness for the buyers. The sellers are in charge. But if price has not closed sweep liquidity, they will wait for a pullback and buy this guy, maybe around here, get a confirmation, then we can go long to this zone. So these are the trade setup we'll be looking at for the course of this week. Today is Monday. The market has really it's just moving slowly. Gold. So gold has overshoot the moon. Now, on Friday, during analysis, we confirmed that gold may likely go to 1.618 Fibonacci extension. So and I have marked that zone. So this is zone we may see a major pullback on gold when we get to 1.168 Fibonacci extension. So what do we do now? We have price have confirmed what? A break of structure here. Then we have a demand that is open. So this is demand that builds structure. We have imbalance. But with price come here with the kind of momentum and the kind of string movement that gold has been doing, we have not seen that it's strong. You can see from here to here now is a very big pullback. Even what it make here did not long today. So for now, I am to face realistic that gold may not come to this zone for now. Otherwise, until we see a great momentum. So we'll shift to smaller time frame and look at what we can do. So if I refine this zone, now this is the zone. This is the best place. This is the best ideal place to buy gold from. That is first zone we are looking at. I will just mark all the zones that we may see a possible pullback and to buy gold. So I will mark them out. So we have the first zone here, demand. Then we have another zone here, another demand zone. Why? This zone is causing momentum that actually breaks structure. So here is realistic. Here, I don't think for now because of the momentum that build around gold. So we'll pay attention if price come to 331.26, then we can look to shoot up to this zone, right? So actually now, there's nothing it should ask you to do anything on gold now. If you are selling at your own risk, and you are buying at your own risk. So what I can confirm now is on 1 hour, our gold is ranging, and we need that ranging. Like what I show you on weekly basis about what we call the 3 phase of the market. So now, 2 things will happen. As it's ranging, give us a fake breakout, return, then we buy gold. So if price fade out here, then we know that going low. So when price is selling like this, you are not meant to sell this leg because this leg we can regard as a form of fake out. So first breakout, then the idea is when you break out like this, is to wait for shift in market structure and continue buying. So we look for that. And again, another thing is if gold first break up, then we may see it coming down, then we can look for a sell. So in that two things, we just need a confirmation. But for now, there's nothing to do on gold. Gold, even you can see I have come to an hour time frame. So just leave gold now. Allow gold to come out from this sideway range that is now. Then after it come out, they will know the next decision that gold will give us. So for now, we don't need to dwell much. There's nothing. Gold is ranging. Preparing for another phase. Break up, break down, or buy. Break up, or look for a sell. So that is it. Lastly, on major currency, I was looking at this AU this morning. The AU, see? So I actually have tried to do a little sell on AU this morning. Why? So you can see that I have my DC there. So let's look at it. From daily's perspective, we have, this is a major shift in market structure on AU. So we have our major mix of market structure, right? So now, like I said, I can still categorize everything that happened here as what? As a range. Now, we have price, breakdown, so a shift of market structure. So we could look for opportunity now to get it. So 4 hours, break of structure. So we have a break of structure from 4 hours. I have liquidity taking care from this low. So this gives us what? A liquidity from that high. Then price has come back to what? A 4-hour supply. This is a strong supply. So when I look back, every other supply has already been mitigated. Number one, we have a break of structure here, right? So we have, let's say we have shift in market structure here. Then this supply zone was open and the price. So this has been mitigated. So these supplies have been mitigated. Then another one here, we have this little shift of market structure. So we have this shift in market structure here, internal break of structure. There was the supply zone that break the structure, this guy here. So this guy also be mitigated. So all previous supply, when you go back, that all has already been mitigated. So, and this is only supply that's left open. That's only supply that left open. So what do we do now? I'm seeing this supply zone, a very strong zone that can push price down back to this low. You can see price has created a trend line liquidity, a fair value gap, and a demand. At least this demand can be what? A target. So looking for a sell opportunity here. So one thing is whether if you want to join this trade now, it's still good. Let me see. Everything is worth risking. So that will give you about 78 pips stop loss. But if you want to wait for confirmation, then simply come to 15 minutes. So let me remove this. So you come to 15 minutes. Then wait for what? Shift in market structure on 15 minutes for confirmation. So this low, so I believe, so this low, once that low is taken, so we have price, then you can use this demand supply area and do your entry. So it's whether you do aggressive entry now or you do confirmation entry. So based on confirmation entry, you should be able to analyze that one and do it for yourself. But on aggressive entry now. If you enter now, you are ready to reach 73 pips. Your stop loss will be above here. Then your TP. So this trade will give you about 5-hour trade. This is that is a great setup. For me, the risk of this trade is worth taking based on the risk to reward ratio and based on the market structure that is before me. I think this should be a good setup, but the market can do its own. This is an A1 setup. This is an A1 setup in case you want to take it. So I'm done with that. What's time? So I will just confirm one or two this thing other pair, and we move to the next phase of this session. So BTC, well, I know that we have some people that trade BTC. So BTC from daily, BTC is currently ranging from daily perspective. We are in 84,000. So I don't love a ranging market. So let's see. We have this demand. So this demand has not, okay, has it been tested? Let's see the price. No. See, let's see a space open. So that's weekly. Let me figure to daily. So I still have a space for, so I will find this to this last. So I still have a space that before the proper bullish that BTC can still get to around 69 to 70,000, which I have been projecting then before the bull take over again. So from the 4 hour, from daily, we are bearish more on BTC. Here confirm wall, break of structure, price is returning back to this supply. So don't be surprised that you may see BTC collapsing again. For BTC to continue major bullish, we have price to take out 88,000. If price break out 88,000, then BTC may roll back to where? To 100,000. So that is my submission for BTC. The S&P 500. S&P 500. We are currently bearish on this stock. We have now, there's something here that this guy, we may see a bullish, continuation bullish, because price has, the negative price, sub liquidity from that low, then we have price closed last week with a very strong word, bullish momentum. This is a very strong rejection from this low. This is signs of bullish evidence. So what do we do? If we get a pullback, we'll continue to look for a buy on BTC on this S&P 500. So which zone am I looking at on S&P 500? I'm looking at this zone. Why? I will confirm this one as what? As a low for inducement for price. So price come back here, then we can look how we buy. So S&P 500 is confirming bullish, having what? Change of market directions from that zone. So that is my projection for S&P 500. Give us another leg to this demand, then we look for, will be a very opportunity to buy. It has created a lower high leg. So this is a sign of a bullish. So we'll continue to look for a bullish opportunity on S&P 500 to take price back to the previous drawn liquidity, which is this high. So that is for that. Last, before we move to the second phase, out of GJ and UJ, let me pick one. GJ, let me pick GJ. So GJ from daily, So we are more bearish on the daily angle of GJ. So we have all price shifts in market in that angle. So that confirm. Then we have the supply zone that's open. So we see price come back to this supply zone with this, fill up this imbalance, that can give us another leg to that. So now we know that GJ, we are bearish. So all we need to do as a trader, we need to trade based on the market directions. So the price, so we need price to go up, give us shift in market structure, then we can continue, we can look for a sell on GJ. So guys, this is our projection for the week on major currency, commodity, and the minor currency. So now we will quickly, for the next 20 minutes, to look out to synthetic indices and spot out some more trade opportunity from that angle. So at this junction, I want to hand over to my colleague Sito to do justice on the synthetic indices. Right. So Sito, if you are available, can you give us your insights on synthetic?
Hello, good morning, everyone. Can you hear me?
Yes.
All right, thank you. Thank you. It's a brand new week, and we look forward to catching some peeps. So let's look at some synthetic indices. Let's just look at some of them. All right. My screen is coming up. So before that, I see that we have new people on the call today. I don't think there's some people here that have joined us before. So this is synthetic indices powered by well trade. Okay. So this is the synthetic indices. We have a large number of them. Let me just quickly show you the list. As you can see on my screen there, we have FX volume 20 to 99, FX with volatility 20% to 99%. We have Flip X1 to X5. We have Gain X, and then we have Pain X. We have SFX. So these are all synthetic indices. Okay, it's very similar to the one that you know, but this is powered by Well Trade. Okay, so for those that are joining us for the first time, we are happy to have you, and it's going to be a great ride together. So let's start with FX Vol 20. I just have a few of them that I'll touch this morning. Let's look at a few of them. All right. So previously we talked about this area where we had a sweep of this major high. Okay. Then as you can see, this zone is a very nice zone. And I'm also looking out for this area here. Why am I looking for this area here? Because we have a lot of liquidity that price might feel in that area. Okay. But before we get there, what happened is that we took this high here, and then you see, how did we take the high? We had what? We had weak candle rejections here, about two of them. So that showed weakness in market. And of course, on the 4 hours time frame, you can see that we broke structure to the downside. Is that okay? Can you see? We broke structure to the downside. So now this is where the break of structure started up here. But if I want to make it very clear, I'll draw it down here. Okay. Let me draw it from there. All right. So now where are we looking to trade from? So personally, I like this area here. Let me mark out this guy. I like everything that's happening here. Okay. Why? Number one, this high is a protected high because we first of all had a what? First of all, had a sweep of liquidity here. Let me mark that out. Had a sweep of liquidity there. And then price did what? Price ran impulsively to the downside. We had break of structure here or a change of character, and then followed by what? By more change of character to the downside. And then this place here looks like our what? Our liquidity that price has to go and take. Is that okay? Let me change that. So that area here looks like the area where price has to go and grab liquidity. So I'm looking at this supply zone. Short position. Looking at this supply zone. So as you know, my rules for entry, we have fair value gap, we have break of structure, we have what's it called? We have inducement. So these are the things that I look out for when I want to take a trade, and then you can just target, a 3 risk to reward ratio. So this is what I'm looking at for FX volume, FX with volatility 20%. Okay, so we had a sweep of a major old high, this guy here. After that sweep, we swept it with a nice impulsive move to the downside. Price has changed character, and then of course it has given us what? It has given us an inducement up here. So we're looking at how we can capitalize on the sales, waiting for price to go back and mitigate that area. Of course, this is the 4 hours time frame. And then if this area is violated, then my next point of interest will be up here. All right. So if this sell here is violated, I'll look for price to come and give me a development around here that I can trade from. Is that okay? So that's my lookout for FX volume 20. All right. So let's see how that goes. Maybe this week we should get that zone triggered. All right. So let's check 60. Let's check 60, FX volume 60. What do we have for 60? Okay. So for 60, a demand zone that was called on our last slide was triggered. And then we had, okay, let's see, from daily time frame, right? Price came down here and it changed character. So definitely when price breaks, structure to a particular direction, and it has to come back and do what? It has to come back to retest that area. Is that okay? Price has to come back to retest that area before continuing. Are we okay? So that's what happened here. So now after this place, after this change of character here, you can see momentum, fair value gap was left behind. This was the new demand here that was formed. All right. So now now we are targeting this area for price to get to. So I did not call it trade for us there. We have to see how can we capitalize on this move. Let's go to the 4 hours time frame. Okay, let's see, where do we have this would have been a nice area for re-entry, this area here, but we have missed that. So let me see. Okay, so basically FX volume is 60 is bullish. So I'm looking at how we can grab something from this guy, and the price action, as you can see, we say it's very efficient. What efficient? It means it's not leaving behind a lot of fair value gaps for us to capitalize on. Okay, the wicks are filling up all the bodies of the previous candles. So the last fair value is up here. That is this one that's coming here, and I wish it happened, when it was somewhere down here. I would have said, okay, we can capitalize on that trade. And then you see that we're also interfering with the fair value gap here. Can you see this? So even as much as we are trying to target this high, price can still, give some retracement from this fair value before continuing. Because if we were to enter this trade, our stop loss would be below this guy. Is that okay? And I don't want us to be caught out in this fake move before continuation. So let's see how we can take this area. Personally, I would even wait for price to even reach here, and then we can now grab the retracement. So like I said I would like for price to even take this high and then print something, okay, that we can do, that we can now look to trade from. Is that okay? So that's what I'm looking out for FX volume 60. All right. So the price action so far is very efficient. So we cannot pick out any trade. I don't want to just call it trade for you for calling sake. right? On this market, you always have a lot of fair value gaps. And why it's essential to join our training is that you know the fair value gaps that matter the most in the market. Because I can open any chart for you and show you tons of fair value gaps. In fact, you can see tons of fair value gaps, but which one holds more water than the other one is what you have to, equip yourself with sufficient knowledge before you can pick out. Okay. So this is FX volume 60. So let's wait for price to develop properly for us. This was a nice area down here for a trade, but since we did not call that out, let's see how price can develop in the future, and then we can join in on the buys. Is that okay? So flip. Let's go to the flips. The flip X1, X2, X3, and X15. All right. So daily time frame. Daily time frame. Okay. So we are here. So what do we have here? I have two zones that am looking out for this guy. Now, we have been very, very bullish on FX, on flip X1, right? And then at this point up here is where we had a change of character. Can you see? And then since that point till now, price has just been falling. In fact, price has just been nosediving. Okay. It has not, given us, going back to do retracements, it's just been dropping, dropping, dropping. So what are we looking at now? I'm going to go back to the daily time frame to see, okay, where can price decide to take a breather from? And I'm looking at two areas right now. Here, I'll tell you I'm looking at these two areas. I have here, and I also have here. Okay, so these are the two areas I'm looking out for. Why am I looking out for these areas? Number one, change of character here, and of course, followed by what? Followed by what's it called? Followed by fair value gap here, between here and here. So we had a change of character here, and then we had a fair value gap here. So this is why I'm liking this demand zone. Is that okay? So what do I always say? I say we react to the market. We don't predict the market. Okay, that's why I did not just go ahead to place a buy limit there. So now what am I going to look out for? I'm going to look out for price to accumulate and then give us a change of character on the 1 hour, or let me say the 4 hours time frame. Okay, this is the 1 hour time frame. Good. So now what do I want to see? Can we do this? Can we have this kind of situation on this guy? Maybe we take this low, it will even be a plus, right? So we take like this, and then we come and take this high. Okay, and then we have what? We can now have a formation of order block and fair value gap down here that we can now look to trade from. This is how we build our anticipation, before we take trades. Because if I just decide, okay, I think this thing will buy, I don't have proper technical reasons why to buy. But if market now does what I'm expecting, then I know that I already planned this out. I already planned that, okay, when this happens, I will do this. When this happens, I will do this. So I'll be happy to take a buy trade from that situation. So right now, from what we're having here, we still don't have a change of character yet. So I'm going to wait for price to print that for me. Let it take this high here. Then it now indicates that, oh, okay, we are ready for what? We are ready for a bullish move in the market. Is that okay? Now, if this area doesn't work out, let's go back to the daily, and I'll tell you why I like that other zone. Now, if this area does not work out, we come back here. Why do I like this zone? Number one, this is a demand zone. That sponsored this break of structure to the upside. Can you see? And then what did he leave behind? Immediately after creating this demand, he did what? He left fair value gap. That is why I like this guy too. So if this place gets violated, I'll look for price to come into this area, and how we can look for the same development I'm looking for here. I'll look for that same thing down here. So if we can have a change of character on the 1 hour or the 4 hours, or even maybe let me stick to 1 hour since they're on daily time frame. So the least I'll look for a change of character is on the 1 hour time frame. If I can have that situation on 1 hour time frame, then best believe we are going to be going in for a buy trade on flip X1. Okay. So let's see how price develops. Okay. Of course, we need to learn patience when trading. Very, very important. I know some of us, when we just enter the market, we want to catch something, we want to trade something. In trading, less is more, less is more. Okay, the less you do, the more you stand to benefit. Are we good? So let's look at flip X2. flip X2. So we have been mitigating. Okay, we had this mitigation here of this supply, and then since then price has now printed us a new supply here. So this was an area where I was looking out for. As you can see, I marked it out. So 4 hours time frame. All right. So at this point, why didn't I just look? Why didn't I just place a sell at this area? I can't place a sell at that area because this is how price moves. We had a higher high here, higher low, a higher high. So for me to place a sell, that means this higher low has to be what has to be swept. So that price now lets me know that, oh, okay, we want to do what we want to sell from this guy. But since I did not get that higher low being swept, I was not in a hurry to take a trade. And as you can see, that place has done what has been swept. Now, this would have been a nice area. This guy here would have been a nice area to, this area would have been a nice area to explore something. But why wouldn't I explore something? Because we are still in what? We are still in this supply zone. Price can just basically gather up some orders before it does what? Before it starts changing character to the downside. So I'm going to wait. I'm going to wait. you hear us talking about waiting a lot. It's the truth because you have to wait in trading. Right? So I'm going to wait. Let me see how what price will do around this area. Okay, let me see what price will do around this area. Then if we can get a proper change of price to the downside, then we're going to sell. Because right now market is still looking very bullish, right? The price action here is still looking bullish. Okay, as you can see, we have sweep, we have change of character, we have some fair value gap here, but I will not exploit this. Why? Because we are in a supply zone. If this kind of situation happen in a demand zone, then I'll be happy to look for buy trade. But since we're in a supply zone, this thing is forming, it can just be a trap. I have fallen victim of that many times. That's why I have to discipline myself to wait for a supply formation, sorry, a selling formation to happen in a supply zone and a buying formation to happen in a demand zone. If I'm having a buy formation in a supply zone, what I want to wait for is for that supply zone to be swept. When it is swept, I can now do what? I can now continue to play continuation of the buying market. Is that okay? So this is also education. I'm giving market direction and also educating us on how to approach the chart. Is that okay? So let's wait for price to do something for us in that supply. There's another supply I marked out. Let me check. There's another supply I marked out. Where is it? Let me see. I think I marked something up here. Okay, that was a fair value. Okay, it was a fair value gap that I marked up here. Okay, let me see 2 hours time frame if we have a nice demand candle there. Sorry, supply candle. Let's see. We have something there. We have something there. Okay. It's not very clean. I'll have to literally, refine this all the way up here if I want to trade from that 2 hours candle. But anyhow, let me leave it at the fair value gap. Let's see how it goes. Let's see how it goes. Okay. Let's see how it goes. When we take this supply, we'll know what we will do from there. All right. So flip X3, we are ready. It's almost 11:30. So let's see. Flip X3, flip X3, 4 hours time frame or daily time frame rather. You see, I always start my analysis from daily time frame, right? Because the higher time frame is your friend. You want to know what is happening on the higher time frame, then you can now scale down to the lower time frame. Okay, so let's see. All right, so we had this major push that mitigated this demand. Price came back into this supply area here, gave us another push to the downside. So let me see 4 hours. Since we could not touch this our demand zone. So let me see 4 hours. So we are coming from this fair value gap area here. This is nice. Can you see that? Coming from this fair value gap area. And now what do we have there? We have a candle that is left unmitigated here. Okay. So change of character to the downside. And then we have another, okay, actually break of structure to the downside. Then this move again also came with what? With its own, change of character here. So what do we have now? We have this candle. We have this candle here. We have a little bit of fair value there. Okay, and then it looks like price is giving some liquidity above, just underneath that area. So this would be where what I will look for selling opportunity on flip X3. This supply, okay, this supply will be a supply where I'll look for a selling opportunity. So since you're on 4 hours time frame, our stop loss may be a little bit too big. So when price moves into this guy, all right, we're going to wait for price to give us development on say 1 hour time frame. Let's give us a change of character and then give us something that we can trade from. All right. So I like this lookout for X3. It's looking good for X3. So let's see how that goes. Since if this was 1 hour, we can say enter the trade straight up. But this is 4 hours. We want to have a nicer risk to reward ratio. Let's wait for the price to go on to 1 hour time frame. And then we're going to explore or be exploit. So flip X4. What's on flip X4? Flip X4 is doing what flip X5 was doing to us, some weeks ago as well. Okay, where are we? All right. So we have taken all of this structure, have swept all these highs. So on we are now bullish on X4. So if I'm to take out my Fibonacci to see, okay, where is price most likely going to run all the way to? I have this area down here. I like from this 60% region. See, I've marked that 60% region out. Now let me delete the Fibonacci and show you something. Can you see? Okay. All right. Can you see something? That inside of this my 60% region, I have a demand zone inside. Can you see that? Are you seeing? So yes, we have fair value down here. That price can even run all the way to this lower demand. But this our 60% to 70% region of Fibonacci is showing us something on the 4 hours time frame. Let me see the 4 hours time frame. Yes. Okay, so this was the last. Let me delete this guy now. So this was the last demand that sponsored the break of structure here, leaving behind fair value. So all this move now, you see, this market is too steep. I cannot tell you to enter or buy from anywhere because to sell rather from anywhere at this point because we don't have a proper stop loss region and a target region. But if price can fall into this our 60% region, now we can start to expect. The word there is expect. We can start to expect that okay, maybe price will decide to, you know, come together a little bit and take a breather before it can, give us some buy opportunities. So I like this zone because number one, we had a sweep, we had a sweep of this liquidity here, and then we had a what? Then we had a break of structure here. Can you see that? So we had a sweep here with this candlestick, and then we now did what? We now broke structure with this other one. That is why I like this one. That's why I even marked it down. I didn't even know that it's aligned with that 60% region. That's good. So let's see. Let's wait for that to happen. And lastly, the last instrument on my watch list is going to be Flip X5. Flip X5. So Flip X5, I have this higher time frame demand zone. Okay, so since this guy started going, it has just been, you know, moving to the upside. Okay, let's see. All right. So before this stop, let me go to daily. What's going on? Okay, okay. So this was one area I was looking out to see if we can sell from when price comes to this area, but apparently, that did not happen. So my next area of interest is where? Is here. Is that okay? Why? It's simple break and retest strategy. We teach that in our academy. All right. So we have something like this, and then we break, and then we go back to touch that area. Of course, the things you look out for before you can validate that. So now I like this zone. So while all this buy is happening, if we can come into this area, this would be the next area of interest for us. So if we can push into that area, we can look to sell from there. So on the 4 hours time frame, I noticed that the price action, you see why I say that synthetics has been stressing me of late. The price action has been very, very efficient. I do have fair value to trade this buy from. Okay, the last place that was nice for a buy was down here. This is the last place that was nice for a buy, and then since then they have just been going up. Okay, they have since they have just been going up. Very efficient price action. All right, so let's see. When we come into this area, I'll look for a sell opportunity, and then if we come to this area first, I'm going to look for a buy opportunity. So for now, today is Monday, like I said. Let's take our time. Let's look at the market from a very logical standpoint. All right. And then I'm very sure that we're going to make money this week. All right. Some of us, we made a lot of money. Some of us on the group, we saw that money was flying, last week. And that's what we love to see. Right. That's what we love to see. And our trades, there were some trades on currencies that I called on Friday. All right, they are doing well. My only problem with those trades was that they were coming up. They were coming up at the weekend, right? Coming up the last hours. From 5 p.m. Market is closing. Everywhere is becoming very slow. That is when those trades, were triggering. That was an EU and GU. Those trades were triggering at that time. So I know some of us may not have wanted to capitalize on it based on, the time of entry. Is that okay? Well, it's okay. I'm sure that this week we're gonna make money together. All right. So I thank you, the people that are joining in from the YouTube. Unfortunately, I can't access the YouTube right now. I would have, given you a shout out. So for people on the Zoom, Caesar, Edibo, STN, Precious, and the person using the Infinix Hot 9, Mr. James, Josh, Lady Nadi, Michael Oga, Mr. Lufemi, and I think that's Sam Dina. Sorry if I don't pronounce your name well. So thank you everyone for staying up to this point. It was a nice session with you all. So let's just go on. Have a nice day and check our charts together and let us make money. All right. So have a nice day, everyone. See you later. See you tomorrow, actually. Bye.